the big debate that I know both of you will have sat in a lot of conversations about this over the past few years. The billable hour and whether it's going to stay the primary KPI for lawyers. Now, the research is telling us yes. Law firms, 74% say they still use the billable hour as the primary KPI for their lawyers. 99% plan to raise their billable hours targets again this year, despite 64% of firms actually reporting declining billable hours. So the kind of top line summary of that, law firms appear to be asking their lawyers to bill more hours, whilst also asking them to adopt technology that perhaps reduces the number of hours for kind of clients who are requesting that they adopt that technology. Do you think we will see the demise of the billable hour anytime soon, Eric?
I do not. You can write it down. I will actually have a drink to that.
Breaking news. You heard it here first, folks.
No, in all seriousness, I think there will be a trend away from it, a very slow trend over time. I think, the demise of the billable hour has been predicted for like 30 years in legal, and we've not yet seen it, but we are seeing, gradual change. I think firms are going to focus more on value and outcomes because they're going to have to point the use of AI, the use of technology that in theory would reduce billable hours, says that they got to get smarter about how they're pricing things. I think their customers are also going to begin to demand evidence that they're being smart with their money. And you can define that how you might, but at the end of the day, it's still going to remain, it's a foundation of all that goes on in the law firm. How many hours do we bill? Your point that billable hour targets went up in an environment where we're struggling to bill for them or retain that. And also seemingly the addition of new technology would make that a little more difficult. That says to me that the firms are going, look, we're going to set a target high with an expectation they'll be challenged there. But if we leave the target where it is, we could lose it at the bottom. I think the real challenge will be on the commoditized work. Right? It's going to be the stuff that's repeatable that you would say that an AI model or a large language model could replace that'll face the most pressure.
Rob, you've worked in several different kind of financial legal tech companies in product.
Yep.
How have you seen things shift over time? Do you agree with what Eric's saying?
Yeah, I agree with what Eric's saying. I think it's not going to go away. I think you're going to see a shift, and I think we're entering, maybe I'll coin it here, but not quite. But I think we'll enter through sort of a hybrid era where the billable hour or the hour metric will be used more internally to drive behavior, to drive goals and targets. Externally, firms will start to shift to an outcome-based model in terms of how they price. So in theory, the billable hour would go away, but it's really not. They're just shifting how they're going to use it. I think that's what we'll end up, not next year, but over time as these new tools come in that are really challenging this idea of a billable hour. I think you're going to see that shift. I think at the end of the day, this is an apprentice-style business. This is a business where people learn as they're doing, and so you're going to have to be able to measure that somehow. And so I think internally they'll use it. Externally, I think you'll see things change to outcome-based. You'll see client retention metrics. You'll see success metrics in terms of satisfaction and things like that, where they'll measure the success of the outcome of the engagement, and also look at different things and how they'll measure was this a successful engagement or not. That's where I think we're at. It does.
And I guess tying into that, I mean, the research also says that 47% of firms have seen increased client requests for AFAs. That's up 29% last year. Rob, you mentioned it's going to be a gradual process. There's going to be a hybrid approach. What sort of AFAs are kind of most common? And is it a case of identifying certain kind of practice areas or types of work that's suited to different types of arrangement?
Well, I think, so yes, so pretty much everything you said there. I think there are certain engagements that make sense for an AFA, like a fixed fee type thing where it's very commoditized, it's very straightforward, it's very predictable, right? We understand the mechanics of what's happening here. Visas or things of that nature are fairly straightforward. Litigation, things of that nature, M&A, those will still stay in that hourly category, but that's not to say that portions of those things may have an AFA component to them. I think you'll start to see this idea of blending within an engagement. You'll start to see some of the hourly, some of the sort of fixed fee. so that they're blending these two together. And that's why, again, I go back to how firms price and how they go about their business is going to change, I think, and that they're going to have to get more creative in what they're doing. But internally, firms will still use this idea of marking the hours so that I know what someone's doing and I can grade them on their work. But yeah, that doesn't surprise me that AFAs are going up as well. We'll talk about AI here in a minute, but I think the advent of new tools are forcing firms to rethink certain AFAs. AFAs have been around a long time, but I think the real push to value-based and how they're leveraging technology, because their clients are coming to them and saying, hey, how are you leveraging technology? Because we want to get that benefit. We want to see the benefit of that. We want to see our bills reduced because you're leveraging tech that makes it easier for you to deliver the service to me.
I think I'd probably double click on a couple of things Rob said, not the least of which is the billable hour may become a cost measure, not a profitability measure or billing measure, right? But you need to understand what your costs are on the cost. Easiest way to do that is based on, pretty straightforward cost of the attorney divided by the number of hours they bill. I also think the point should be made that the client side has to want to consume the business that way, right? So what we hear all the time from our pricing clients in particular is, look, we go to market, we offer an hourly rate, they come back and, hey, give me something creative. And they spend a lot of time putting together creative models, et cetera. And then they send it over to the client who says, yeah, let's just stick to the hourly rates. Can you give me an 8% discount because it's predictable, it's understandable, and they don't get in trouble if something goes wrong, right? So I think, again, the other thing I would say is that I think AFAs have gotten maybe a bad reputation as a profit squeeze. But the reality is, if we talk about AI in a little bit, just because the firm handles the case efficiently doesn't necessarily mean it should be less profitable.
Right.
And I think that's partly why these pricing discussions that go beyond the billable hour can get more creative.
So we've skirted around it. We're going to talk a bit more about AI. So data is showing us law firms saying AI is delivering 29% faster task completion, 34% higher matter throughput. I think even in the last year, firms have come a long way in terms of adopting AI. It opens up the shift to value-based pricing. And what's your view on how firms should be approaching that?
I mean, it's funny. We did a dinner in Chicago back in September. We had a bunch of 24 law firms, senior pricing ops people at these law firms. We talked exactly through this problem. And to no one's surprise, no one really has a good answer to this. I think everyone is still finding their feet. I mean, if we think about AI and technology and just the impact in my lifetime in legal, it's less than Eric's, the reality is it's come on faster than any other tech, I think, in my history in legal. I mean, if you think back the e-billing revolution, e-discovery, all these things came on, but AI has really come on and really taken hold the last 2 years. And so firms are struggling with this, right? This is traditionally an industry that moves at a little bit of a slower pace, right? And there's nothing wrong with that. And so I think firms, going back to the September conversation, they were still struggling with how do we price? How do we use this technology effectively? And what is our client's expectation? And so I think there isn't a one size fits all. I think you have to engage with your client. Eric mentioned it earlier about how they want to consume your services. I think you're going to have to engage with your client and be transparent about how you're using it and how you're not using it, right? And I think we've seen in their RFPs and RFIs have come out, more and more clients are asking for that information. So I think you have to fit it with your business model. You have to fit it with the type of service that you deliver, whether it's litigation, whether it's insurance defense, whatever it may be. And you then have to be transparent with your client to say, this is how we're using it. You don't have to get into the cost savings of it, but you have to get into, this is how we're using it, and this is how it's going to benefit you. Because once you start to shift the conversation to, this is how it's going to benefit you, you're then talking about value, and you're talking about a different way to price that engagement. And I think that's where firms will have to come in.
I think coming back to that dinner, a couple of the conversations were around what the consumer of legal services is buying as an outcome. And everything else is associated to cost to get to the outcome, but that shouldn't necessarily change the cost of the outcome. So one factor. The other is, I think, value-based pricing gets thrown around a lot, but the reality is as AI makes a bigger impact on the efficiency of a law firm, clients will expect to benefit from that.
Yep.
I think the consensus in a couple of conversations we've had has been, hey, it may be a 10 or 20% efficiency gain, but it's still finger in the air. These models are new. They're evolving very quickly. They're very expensive. They're a big investment for the law firm. Most firms haven't figured out how to bill for it yet. So there's just a lot of factors there. I think 26 and 27 will be the time that gets figured out because there's just so much effort underway to do that. I think where it's likely to make the biggest impact is where you've got kind of repeatable and predictable processes. That's very obviously the areas these models can attack. At the end of the day, if I'm a law firm and my client's pushing me to reduce fees by 20 or 30% on work I've been handling forever, are they going to give up 20 or 30% of the risk that I take? Right. So there's just all kinds of, the other side of the equation is, while I might be getting more efficient, your expectation is I'm going to give you good legal representation. And if not, it's going to become a big problem for me. So at this point, I don't think we've got any cases at that term, any firms that we've spoken to that are just running a model and, whatever the output is considered good. Everything has to be reviewed. Everything has to be reviewed painstakingly. And the reality is, as that data gets better, it's going to take smarter, more experienced lawyers to tell the story. So I think, you may see the higher rate type of work increase dramatically while the lower rate commoditized work is likely to go away.
Yeah. And I would add to that we were talking about sort of outwardly, right, to the client, how we talk about it, how we price it. But I think inwardly, law firms have to look at how they manage those efficiencies, because just because you gain that efficiency doesn't mean that you're just all of a sudden going to be profitable. And if you don't engage, as Eric was saying, properly in the conversation about the efficiency, the client's going to just want to drive down that price, right? They're going to drive it down to this commoditized price. So you have to be very clear on how you're managing that efficiency internally and how you communicate it externally. Otherwise, all the profit, so to speak, that you get out of using these tools, all the efficiency is you're just going to lose it in a discount conversation. So you have to be really careful about how you managing that and how you articulate the kinds of efficiencies the clients gain out of that. Because you're right. What we heard anecdotally is 20, 25%. What people may hear in the press is, oh, they're 100% more efficient or they're 80% more efficient. So you've really got to be careful about those conversations.
I think too, you mentioned the kind of hybrid approach with AFAs and hourly billing. Yeah, I think we may see more pressure where larger corporate legal departments are doing more of the commoditized work in-house and then pushing the higher level work out, which creates a whole new challenge for the law firm. What am I getting? I've got to certify it. I've got to stand behind it. How do I interrogate what was done? But again, where it comes out is, I think, when our law firm clients are talking to their customers and communicating with them about what they're doing, how they're doing it, how it will benefit them, and building that trust in the relationship, they'll go a long way towards, a more efficient result that they can share, better profit with the law firm, and a better result and cost to the client. Definitely.
Great. Just to ask, do you think there's any trepidation within law firms about adoption of AI, particularly from lawyers?
Wow.
I have, frankly, let's call it, like, there's a lot of lawyers who just shy away from technology, period. Right. So this has got to be a little more scary. I think there's probably some who go, this threatens our business model. I think that's been disproven over the last couple of years, but out of the gate, it was probably like, oh my gosh, like, what's this actually going to do? I think we saw a lot of law firms kind of slow down their innovation track to pour everything into AI to be sure it's not going to disrupt our business model to the point that, it changes everything. But, we partner with a lot of the AI providers. I think, their vision of how this technology will benefit a law firm still has some time to incubate and still has some time for the lawyers to pick it up as they expect them to.
Yeah. In my mind, it's like no other technology. It's like any other technology they acquire. Law firms, lawyers are typically skeptical. They want to see it. They want to see it work. They want to see it work repeatedly. Like, if you think of some of our financial tools, the numbers have to be right. Otherwise, they don't trust it, right? So they have to trust it. And my experience in legal has been that if the product is solid, it does what it's supposed to do, and it delivers the results, they'll adopt it. But that curve takes time. And this one, I think, takes a little bit more time because it's directly at what they do versus a pricing software or a BI software, which is providing information. This is kind of mimicking what they do. And so I think it'll take a little bit longer for them to adopt them, but they're jumping on.
And to that end, what gets in the press, right, is when somebody does lazy lawyering as they had to do the work, pushes it into a court and it's questioned.
Right? Well, there's a made up citation.
Yeah, exactly. So again, that to me isn't the tag. That's using it incorrectly.
And I think, one of the things we've heard from law firms that we've spoken to, particularly large law firms, is that clients are now kind of writing into contracts that they have to be using AI, and they also have to prove how they've used it and prove the efficiencies it's driven. Do you think that's going to become more common?
Yeah, 100%. And again, the question I have is how aggressively, right? So writing it in the contract says you have to do it this way is kind of pinning your law firm down, maybe more so than you'd like to. I think, again, it gets back to that trust, communication, predictability, consistency in the relationship. But, actually, the panel that Rob hosted at a recent event, there was one general counsel who was pretty aggressively basically said, don't bill me for anybody under a fourth year.
Yeah.
And, that was a software company. You might expect it to be pretty aggressive, but that definitely gets some debate going in the room. You're kind of tying our hands from how we're going to do the work to the point of probably damaging our ability to do it well, that's risk.
Yeah, I think it's building off of that. I mean, that person's particular viewpoint was we're expecting you law firms to make the investment in these technologies. We're gonna expect you to use those, and so and we're not gonna make those investments, so we're not big enough. We can buy all the different pieces, but we'll know that the law firms have, we expect you to be using it in such a way that is to our benefit, right? Now, I think one of the counters to that, which was a little bit tangential but onto it, was, well, yeah, but we're still bear 100% of the risk, right? So you're asking us to use these tools, but we still have to bear 100% of the risk. And so again, I think that goes back to the pricing model. That goes back to how you price these engagements, because just because I'm using a tool, the risk is still there. Part of your rates, part of what you're charging for is to assume that risk. So I think that's where you get into this idea of value and, how are we pricing these engagements, even if we're using this tech, right? And I think that's the paradox, going back to the sort of the original question is, it's how the value is priced versus how the value is created. I think that's what firms have to find the balance between. I think some firms are better at it than others. And I think over time, the industry will move to a position where everyone sort of understands the dynamics between those two, and you'll get to a better spot.